Hello and welcome to Ask You for a Trend. I'm Josh Lipton, and for the next half hour, we're going to break down the trends of today, then I'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving into. A bad start to the week for markets, with the Dow plunging over 600 points, the NASDAQ nearly 500, as investors brace for tariffs on Canada and Mexico to go into effect Tuesday. We're going to dive into the rest of the day's market trends. Then affordable cars could be a lot less affordable soon. We're going to take a look at how tariffs have impacted auto prices in the past and what could happen this time around. Plus, Apple gets ready to refresh its MacBook Air lineup. We're going to tell you what to expect. For our chart of the day, we're taking a look at the potential impact of tariffs on the auto industry. Yahoo Finance's Julie Hyman joins me now with a closer look. Julie.
And specifically, we were talking about the 25% tariffs that are set to go into effect at midnight on Canada and Mexico. President Trump saying earlier today that they're going into effect, that the time to make a deal has run out. So what effect does that have on the auto industry in particular? It's one of those that is the most exposed to these tariffs that are set to go into effect. And that's because a lot of the cars that are sold in the U.S. are imported into the U.S. Now, just over half of the cars sold in the U.S. are actually made in the United States, 53%. This is from data that was collected by the Wall Street Journal. But then 16.5% are made in Mexico and 7.6% made in Canada. So that obviously would have an effect. The others split between places like Korea, Japan, Germany as well, the rest of the world. A lot of different automakers do assemble their cars in Mexico and in Canada. But even part of this 53% that make their cars and then sell them in the United States get parts from other places in the world. Auto parts they import into the U.S. and they then assemble the cars into finished products here. So that's another way that we could see tariffs make their way into the cost of vehicles. Then consider it's not just the Canada and Mexico tariffs, but also the steel and aluminum tariffs that are set to go into effect in a couple of weeks from now. That also could have an effect on other types of steel and aluminum products that are imported from other places, even besides Mexico and Canada. And as our Prasubramanian reported earlier, the Anderson Economic Group now indicates that you could see price increases to the consumer of over or at least $12,000 per vehicle. Now, this is on certain vehicles, right? There is a big range, but it looks like that there will be some kind of cost if and when these tariffs do go into effect as they are planned, Josh.
Thank you, Julie. Appreciate it. Well, the auto industry is one of many bracing for President Donald Trump's proposed tariffs, potential 25% tariffs on Canada and Mexico, adding pressure to an already difficult landscape for car buyers and automakers. For more, I want to bring in now Ivan Drury, Director of Insights at Edmunds. Ivan, it is good to see you. So these tariffs on Canada, Mexico, China, sounds like they're coming, Ivan. I want to dig into what that means for the market you know so well, which is the car market. Starting on vehicle production, Ivan, how much is indeed coming, by your guys' math, from Canada, from Mexico, and how has that sort of evolved over time, Ivan?
Yeah, so we've seen over time the ramp up as far as like what's happening right here, right now. If you look at year to date, we've got about 2 months worth of sales that we've correlated with build locations, and you do have about a quarter of vehicles coming from Canada and Mexico, more of those from Mexico than Canada. And admittedly, when you look at it over time, right, you see nothing but an increase from these countries. And it's not just, hey, these are American cars or American labeled cars being built abroad, but you also have vehicles like Audis, right? You have Hondas that are built in Mexico as well. You have Lexus products that are built in Canada. So, the auto landscape, while it's very visible and a lot of people own cars, right? A vast majority of us own cars. It's one of those things where when you really break it down and you look at the granularity of the subject, it's highly complicated. The badge on the hood doesn't always match your assumptions and what you think is really being put into it.
I'm curious, Ivan, how car companies been reacting, responding to these potential tariffs? What moves have they been making? Have they been shifting production?
Well, that's the thing is you really can't shift production overnight. You can't even shift it over a month, even a year. I mean, this is one of those things where if you build a vehicle in Canton, Mississippi, you cannot make it overnight from Mexico or vice versa, right? This is one of these things where you have to take a lot of investment, a lot of heavy equipment, and then shift it over if you even can. Right? Then there's the logistical problems that come with that when it comes to parts supply chains too, right? It's one of these things where sometimes parts cross multiple countries before they end up here as well. And earlier your reporter was talking about the parts that go into it. It's like an F-150, right? Seen as one of the most American products, actually has majority of products sourced from elsewhere, but its final assembly is in the States. So this is one of those things where it's a highly complicated ecosystem, and any effects, as we saw during the pandemic, when it comes to supply of just the parts, it trickles on down. I mean, it really does change the dynamic in the end for the dealerships, the repair stations, the customers going in. I mean, really, every facet of the industry will be affected by this.
And Ivan, I'm curious, with these tariffs, the question then becomes who's going to eat that cost? I'm curious how you're thinking through that. Do you think it's going to be the suppliers? Do you think it's going to be the car companies? Do you think, no, actually, it's going to be Ivan and Josh?
I think it's going to be a combination of all the above, right? We're looking at D, everybody. Automakers know they will not be able to sell these cars at 100% passed on tariffs. They're going to have to take some back. It might not be obvious, though, right? It might not just come in the fact that, yes, the dealership's charging more once they get the product. It could be fewer incentives. If you see like a 1.9 or 3.9 APR offer that was here in February, disappear in March, disappear in April, you can chalk that up pretty much to tariffs, right? This is one of those things where there's so many different aspects when it comes to buying a car. The price, the outright price, isn't always as obvious as you think it is. It's one of these things where when you look at the incentive structures and how those are laid out and where will these tariffs really hit, even vehicles that aren't heavily tariffed at the full 25%, if you look at kind of the competitive segment that they're within, if they are being hit heavy, it kind of trickles on down. Right? If you're a competing automaker, even though your vehicle doesn't have tariffs, you're not like, your motions and your motivators to provide those same level incentives, or the dealer's flexibility on price might not be there as well.
Some company-specific news today, Ivan, I want to get your take on too. Ford telling us today, reported about a 9% drop in auto sales for February. Dig under the hood, what was interesting is if you looked at their electrified sales, Ivan, so there it's pure EVs, it's the hybrid models. Those actually popped about 23%. Looks like the gas-powered models fell around 13%. I'm curious, you read those numbers, can we extrapolate that from Ivan and just see where these trends are heading for the rest of 2025?
Yeah, so far for sales, this is one of these things where we only get some companies reporting right now, right? Most of them on a quarterly basis. But for the ones that we do get data, we're seeing kind of mixed results. Like you say, Ford's down, but hybrids and EVs are up. It's one of these things, they've put a lot of incentives, especially on their EV product line, because some of those, they have lagging sales, right? They are still selling off a lot of 2024 model year vehicles when it comes to Ford. So if you're a consumer and you're looking for a deal, right away, you can just point your way towards Ford. You'll see some incentives there. But at the same time, right, like you mentioned, the gas-powered products, all right, like your standard F-150s or like Mustangs, things like that, they're not moving as quick. If you look at somebody like Subaru, they've had a great month. Mazda had a great month. The Korean automakers, they too have had some good months. So really right now, it is highly speculative as to, who's going to be hit the most going forward. And like I say, one of these things is that some of these automakers, they're trying to think of how do we circumvent the problem of tariffs, or how do we, build up supply. Right now, we're looking at roughly like 3 million units of new car inventory in the market. And while that sounds good, and that's something that is positive, especially compared to those pandemic years, you think about pre-2020, pre-pandemic, we're looking at more like 4 million units, right? 4.2, 4.3 million. So we're still not there yet. And I think that for some automakers, they're running at capacity already. There's nothing that Toyota and Honda could have done to stock up the dealers with more inventory. So we've got a lot of different things going on in the market. If you're a buyer, or if you're a seller, if you're a dealer, if you're the automaker, really the landscape is very different from one to the next.
Ivan, thanks so much for your time today, helping us think through here a big, important, complicated topic. Thank you. Appreciate it. Stick around. Much more Ask You for a Trend right on the other side. U.S. stocks closing lower to start the new trading month as markets brace for new tariffs. And Yahoo Finance's Jared Blickery joins us now with the trading day takeaways. Jared.
Takeaway number one, it is risk off. That's what we saw today, and that's kind of been the pattern recently. I'm going to show a few markets here. Might as well start with the mega caps, but I can talk about the indices as well. It was a worst day for the S&P 500 since December 18th of last year. That was a hawkish Fed day, and the list goes on. Russell 2000 has lost its 200-day moving average. Now the NASDAQ composite has, and these are the mega caps here. NVIDIA just had its worst day, down almost 9% since DeepSeek. That came 1 week after inauguration, January 27th. Even Berkshire Hathaway, which tends to move opposite some of the Mag 7, because it is kind of a value play in there, that was down 1% as well. So across the board, we have just been seeing this risk-off behavior.
So much red on the screen today, right? Yeah. Reasons. What are the reasons for bullishness? Give me what would make you bullish?
Well, that's a good question. So I mentioned that we've been having this pattern recently of gap up. That means we start the day above where the prior day ended, and then we have been heading down into the close. So that kind of has to reverse. But more importantly, we've just seen this big expansion of volatility. And I'll show you I'm going to start with the dollar here, and I'll show you the 10-year as well. So this is actually the 10-year. This is back down to a 3-month low. That's about the lowest point we've seen on the chart. I can also show you the US dollar. It's a very similar look. And usually the dollar is risk favorable when we see it down like this. Not today, and we can get into that in a little bit. But here's the S&P 500. Now look at these big bars here. In a bull market, you tend not to see these, especially so close to near highs. And so this just reminds me of that early 2022. It was January 2022 when we saw a bunch of patterns like this, and that was the beginning of a bear market. I'm not saying that we have to have it this time. However, this is a little bit concerning. So I want to see a little bit less volatility, and I just want to see some of these negative things that we're seeing throughout the day kind of reverse.
All right, Blick report number 2.
All right, well, let's get to that here because I want to talk about gold and black gold. So not everything was red today. Gold was up, not quite to its record high. It's about $100 off of that. But we got to talk about WTI crude oil, which is, as they call, black gold, and also the energy market. Because if we go back to our charts here, I'm going to show you what's happening with crude oil. That hit its lowest point in several months. And in fact, energy, XLE, had its worst day, I think, in several months as well. So here's crude oil futures. Here is the most recent high, around $81 per barrel. And here we are today, and we are basically very close to 3-month lows. And so I think this is just kind of a picture of the global demand for commodities. Oil is very sensitive to that global economic outlook. And so this is deteriorating right now. So crude oil looking bad. And I'm going to show you the sector action for today as well, because I think it was very instructive that we had not only energy, but also tech leading to the downside. That's the growth and value trade right there, and they're not looking very bullish.
Can I ask though, if some of our eagle-eyed viewers might wonder, since Jared just told me the dollar is down, shouldn't that have been bullish for commodities?
Yeah, so that's a very good point. And I talk about the US dollar being down as a tailwind for risk assets, but in the context of all these tariffs and the uncertainty that it's bringing, that is not bullish. So in fact, a lower dollar combined with these lower oil prices is just saying that the global outlook is generally deteriorating. Which brings us to point number 3, Bitcoin, the ultimate risk barometer, right? So Bitcoin is now reversing the Trump bump. And I think this is very, I don't want to say impressive. I guess I was impressed by the price action, but not in the best of ways. I'm going to show you. I walked into this screen this morning. This was bright green. It was up 8 or 10%. Now it's down 8%. What's going on there? Well, let me show you the last 5 days price action, because we got that huge surprise over the weekend. President Trump announcing that strategic crypto reserve. That is the Trump bump right there, got us right back to 94,500, and now it has reversed all of that. And within the bigger picture, I'm going to put a 1-year chart on. This is a little bit concerning. This is the top that we had, and I was a little bit concerned about the breakdown that we had Friday, saying that it could go all the way down to 70,000, and that is still kind of my target.
I remember on Friday, that was the level you were watching.
Yes,
70,
sir.
Right?
So Friday I had this reason that Bitcoin, and I'm going to go back to our chart charts. I had a prepared chart that shows volume and why I was bearish on Bitcoin until 70,000 on Friday. This little outline here shows you where all the transactions have been. So just by price memory alone, just by price action alone, which is the very basis of technical analysis, this points to this level right here, 70,000, as being kind of a magnet for price. And let me get rid of these drawings here. So what happened in the meantime, we came down overnight, we came up, and now based on this pattern right here, this is a Fibonacci extension, negative 23% to the downside. I don't want to get too wonky here, guys, but that is pointing to 71,000. So now I have a reason to get bullish at 70,000 or 71,000, but not until then. So I still think there's more downside.
Levels to watch. Thank you,
All
buddy.
right.
Perfect. Thank you. Meanwhile, Apple CEO Tim Cook posting a short video on X with the text, "There's something in the air." The tech giant teasing a new device coming to the company's Air lineup. Here with a closer look at what this means for Apple, we have Tech Radar Editor-at-Large, Lance Ulanoff. Lance, it is great to see you. So let's start there. Apple CEO Tim Cook, he posts on X, "There's something in the air." What is in the air, Lance? What devices, what models do we think are coming? Is this a new MacBook Air? Is it a new iPad Air? Maybe it's both, Lance.
Well, we've certainly been hearing rumors about the MacBook Air featuring the M4 chip for quite a while. So if you go back to last year, we saw the M4 chip first in an iPad Pro. So it's kind of strange that the latest, greatest chip showed up there first, then it showed up in the MacBook Pro. And so now it's time for the MacBook Air to get that bump. And I have to say the graphic right there just is all about speed, right? It's air with something darting through it. So it's about the speed and performance of the M4 chip. This is obviously guesswork on my part. Apple said nothing as usual, but we think that's possible. The timing is also right for an iPad Air. I mean, Air is kind of an inclusive term. It doesn't just mean the MacBook. So we think there's a possibility. And you know, the iPad Air might also feature an M4 chip. So, you know, these are some of the things that we're thinking about.
And if these new models, Lance, if they came with that powerful M4 chip, would that mean these models would be better with Apple Intelligence?
Well, starting with anything that was featuring Apple Silicon, starting the M1 and above, they all supported Apple Silicon, but there are more neural processing units in the M4 chip, so maybe slightly better performance. But again, most of the performance that you see, the quality of Apple Intelligence is based on what Apple turns on with each incremental update of iOS 18. We just had iOS 18.4 show up with a couple of updates, but still not the full boat of what we're expecting for Apple Intelligence, what was promised to us now almost a year ago at WWDC 2024.
A broader question, kind of leading me where I wanted to go, Lance. What do you make so far of Apple's efforts in AI? What grade would you give the iPhone maker?
Oh my God, I hate to go a grade. Maybe a B-. I mean, look, this has been incredibly frustrating. You know, Apple, you've got to think back to Apple was a leader, right? It was Siri. They were first with Siri. It was actually before Alexa, right? And then Alexa came out and it became more popular as a digital assistant. And Siri kind of trundled along, got some brain transplants. It's gotten incrementally better over the years. But now in the AI space, right? In the AI revolution, we have 3-month update cycles. And we've been waiting a very long, like 10-month period for Apple to fully deliver the thing they promised. And one of the things that they promised with Siri is that it would understand what is on your screen. It would know the device and know you. And that hasn't happened yet. And so that is where my frustration lies. And I honestly believe this has a lot to do with Apple being so careful. It has delivered on all of its promises about security and privacy. That is the bedrock foundation of everything that Apple does across all of its ecosystem. But honestly, I feel like it's holding them back a bit because the other guys, they run a little fast and loose. And you know what? Consumers don't seem to care that much.
Let's talk about the other guys then, Lance. I mean, how would you then rank Apple if I asked you to rank them with ChatGPT or Google's Gemini or Amazon's Alexa Plus?
Yeah, he just said, well, I'm going to kind of hold off on Amazon's Alexa Plus because we barely got to touch it. We saw stuff that looked really impressive. I'm hoping to actually get some real hands-on time with it. But I've spent a lot of time with Google Gemini. I've spent a lot of time with ChatGPT, and even something like Claude, Claude AI, all of them. And some of the conversational capabilities of these things are really incredible. Their ability to seemingly reason is really something, and their ability to create full-blown art. Apple kind of takes a measured approach, and Siri has its limits in the conversation side. Siri has its limits in the generative image side. So it's definitely behind OpenAI. It's definitely behind Google.
Let me ask you, Lance, for investors who are listening right now, they're hearing us talk about Apple Intelligence. I mean, their bottom line is they want to know, okay, what does that actually mean for the iPhone upgrade cycle? You say what about that, Lance?
Well, look, I think there's been this idea that Apple Intelligence would be the reason to upgrade. And honestly, I don't think that's how consumers are thinking right now. Consumers are embracing AI when it's part of a system that they have. I don't think they're buying systems or even phones specifically for AI yet. If they want a new iPhone, if they need a new iPhone, they will get one. They're usually most interested in the biggest Pro model, the Pro Max model. Same thing with the laptops if they need it. The cycles still seem to connect to back to school buying cycle, not, oh, is this the big AI buying cycle?
Lance, we talked about what new devices, models might be on the way, MacBook Air, iPad Air. They also did announce a new iPhone recently, the iPhone 16e. iPhone 16e. I'm curious, you're showing it there. Give me that review, Lance. What do you think demand is going to be like for that product?
I call this a good, not great phone, okay? Here's the thing. Apple makes beautiful, lovely devices. But this is a really interesting one. The 16E is kind of a mashup of older designs. You notice at the top it has the notch, right? Well, the notch we thought was gone because all of the iPhone 16s do not have that. It has the action button, which is great, but it doesn't have the camera control button. It is a lovely Super Retina XDR display, but has a bigger bezel around it. It has a single 48 megapixel camera on the back, which is a great camera, by the way, but other devices, especially Android devices in this $599 price range are going to be bigger or going to have at least a second camera back here. So it feels like Apple delivered what was supposed to be a budget iPhone, is charging more for it, and is not giving you as much value as some competitors.
Lance, always like talking to you about all things Apple. Thanks for joining us today. Appreciate it.
Pleasure.
Time now for what to watch Tuesday, March 4th. Starting off on the economy, President Donald Trump's 25% tariffs on imports from Canada and Mexico are taking effect. Trump citing the levels of fentanyl coming in from both countries as the reason for the tariffs. Additionally, Trump said he is also imposing a second 10% tariff on China. And speaking of the president, Trump is also addressing a joint session of Congress tomorrow, marking the first major speech of his second term. Trump expected to address a wide range of topics from economic policy to international relations. Moving over to earnings, a big batch of earnings. They are coming in tomorrow. That includes Target, CrowdStrike, and Flutter. Target announcing fourth quarter results in the morning. Analysts expecting the company's same-store sales to grow, driven by a strong holiday season. And taking a look at the Fed, we're going to be getting another round of Fed commentary, this time from Fed Presidents John Williams and Tom Barkin. This coming after comments from Atlanta Fed President Raphael Bostic last week. Bostic saying that interest rates need to stay in restrictive territory and continue putting downward pressure on inflation. Well, that is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.